Finance is the art and science of managing money. It involves how individuals, businesses, and governments raise, invest, and spend their capital for the future. At its core, finance is about the trade-off between risk and reward. Every financial decision involves balancing potential gains against the possibility of loss. Personal finance helps individuals meet their goals, from saving for a home to planning for retirement. It is the foundation of personal economic stability. Corporate finance focuses on how firms raise funds through debt or equity. Its primary goal is to maximize shareholder value while managing daily operations. Public finance concerns government budgets, taxes, and debt. It directs money toward infrastructure, healthcare, and services that support the entire nation. Capital budgeting is the process firms use to decide which projects to fund. Choosing the right long-term assets is essential for sustainable growth. Interest rates are the pulse of the financial system. They dictate the cost of borrowing and influence how money flows through the global economy daily. In 2026, finance is becoming increasingly agentic. AI systems are moving beyond analysis to perform tasks like settling trades and managing cash flows alone. Data quality is the most critical factor for AI success in finance. Without clean and governed data, even the most advanced models will fail to provide value. Private credit has expanded into a $41 trillion market. It is becoming a vital alternative to bank loans, offering faster and more flexible funding. Financial markets are becoming borderless and frictionless. Tokenization and digital assets are blurring boundaries, enabling always-on cross-border payments. The rise of agentic AI allows finance teams to shift their focus. Humans now provide the judgment and interpretation while AI handles repetitive execution. Risk management is evolving into a unified, enterprise-wide model. Cybersecurity, data governance, and financial controls are now inseparable pillars of resilience. Real-time finance is replacing monthly reporting cycles. Continuous monitoring helps CFOs adjust budgets and forecasts instantly in response to market changes. Transparency is no longer just a regulatory requirement, it is a competitive advantage. Clear, real-time data builds trust with investors and stakeholders. Asset management firms are leveraging AI to optimize portfolios. By analyzing massive datasets, they can identify trends and risks that humans might miss. Financial institutions are rebalancing capital toward tech-led growth. The focus is shifting from simple cost-cutting to structural operating model redesign. M&A activity is driven by the need for scale and efficiency. Firms are actively reshaping their portfolios to optimize their position in the current market. The convergence of AI, private credit, and digital assets is creating new opportunities. Leaders are positioning themselves at these intersections for growth. Finance professionals in 2026 need a new skill set. AI literacy, data translation, and critical thinking are now more valuable than traditional manual tasks. Compliance is becoming proactive rather than reactive. AI-driven models now monitor journals and logs to detect irregularities before they escalate into issues. Liquidity is the lifeblood of the financial system. Managing it effectively ensures that firms can meet their obligations even in highly volatile conditions. Compound interest is the engine of wealth. By starting early and maintaining discipline, individuals can harness the power of exponential growth over time. Diversification is the only free lunch in investing. Holding a variety of assets helps mitigate unsystematic risk and stabilizes returns over the long term. Inflation risk can erode purchasing power over time. Sound financial planning must account for rising prices to ensure that savings maintain their real value. Financial intermediaries like banks and pension funds channel capital to the right places. They play a crucial role in connecting savers with productive users. Behavioral finance teaches us that emotions often drive market mistakes. Understanding your own biases is essential for making rational, long-term decisions. The global financial system is interconnected, meaning a shock in one region can ripple everywhere. Visibility and agility are required to navigate these risks. Equity financing allows companies to grow without taking on debt. It gives shareholders a stake in the business, but requires a share of future profits. Debt financing provides necessary capital with a fixed repayment schedule. It is a powerful tool for growth, but increases the financial risk for the firm. The future of finance is human plus agent collaboration. AI handles data ingestion and reconciliation, while humans focus on strategy and complex decision-making. Venture capital flows to the edge of what is possible. These investors fund the technologies and businesses that will redefine the world in the coming years. Financial statements, balance sheets, and income statements are the scorecard of a business. They tell the story of a firm's health, efficiency, and success. Sustainable finance is becoming a core mandate. Investors are increasingly looking at ESG factors to ensure their capital supports long-term global resilience. Mastering finance is about gaining control over your future. Whether at a personal or enterprise level, it empowers you to turn vision into tangible reality.